weekend, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up. And this wrap-up is for Friday. And this is February 5th, 2021. Now, on the weekend, we only look at the weekend charts. I've already recorded some of my videos for my users in the SPDR ETF and the futures paid subscriber videos. Those will be out tomorrow, and I'll do some editing on them tonight, but they're done. So let's get these done for you and out there. Now, the important event of the day was that last night, Thursday, and then into Friday, tonight, we saw the Senate having a lot of votes throughout the evening and then into the wee hours that ended up in the big 50-50 split right along party lines, where Vice President Harris had to break the tie, and the COVID package will go under the rules that the that the Democrats are looking for. That package is going to get passed in some manner. You can see, we just saw what's happening, and that's it. And then the president came out at about 11:30 today, and he made a statement, and that was on Friday today. And he said those checks for $1,400 are going out. So he just told the Republicans very simply, okay, negotiation over. It's my way or the highway for you. $1,400 checks. I told people I ran on it. That's what's going out. And then as he was finishing the speech, he turned to Ms. Pelosi, Speaker of the House, and goes, now we can get on to infrastructure soon. And everybody, of course, doing their smile. But I saw that and I realized, you know, you're going to see a number of these markets stay strong. What we saw was the interest rates, the bonds and the notes basically weaken in the 10-year and the 30-year. We saw the gold, the silver hold up. Copper kept gaining on the day. Do infrastructure, copper's going to be a big use. Dollar come under selling pressure. Why not? We're going to have to borrow more money as these programs go on and on. You're only at the tip of the iceberg of what we're going to spend. I know you don't think I'm right, but you watch the spending that's going to happen here. He wants to get to the wage of $15. Well, that's not going to help the economy. I know he has his own view on it, but talk to business owners that rely on a small company, $15 wage, a waiter, whatever it is, that's going to kill some of this. So just want you to know what's going on. It's a mixed picture, but a spending picture. So as I come to the tech sector, how could you not like the tech sector in all this? I mean, the tech stocks have been on fire. They're still doing well. The earnings are phenomenal, and the market keeps grinding higher on the weekly chart. The pattern has been one consistently of higher lows, higher highs, and it's been doing this since back here in October. Yeah, October of 2020. It's just been a run to the upside. Hasn't ended yet. All things come to an end. All things. Nothing grows to the sky. So you will hear, rightly so, good technicians, solid money managers saying you've got to build a portfolio that can withstand anywhere up to a 15% correction. I don't disagree. The problem is, if you started building it here, if you build it here, you've missed all that. And I'm just giving you these sectors, but that is the problem that you have, and it's hard to do. I do pay attention, though, to the charts. To me, the charts are better than any analyst I've ever met. Obviously, how you interpret them is very important. But I have some steadfast rules that you can apply yourself. And I say each time you hit a Bollinger Band, like you're about to do here, 136.04 was today's high, or just shy of it, by about 58 cents. Each time you hit it, I think the pros take money off the table, and they have that money to reload, and on pullbacks they're buying. They probably keep a core position of some type until they determine in some manner their trend is ended. A lot of people do that. The bias of this market, I don't think anybody's going to fight with me with my analysis. You could, but I think you'd lose the battle. That when you're over the 18-week average or some moving average you like, the bias is up, and when you're under it, the bias is down, and that should act as a filter on other technical parts you have. So I then go to my momentum index, and it's embedded. When it's embedded, it means that you've converted the two numbers that make up the slow stochastic. For those of you that are purists, they're called a K and a D line. And when those numbers are going sideways over 80, I determined years ago that they changed the character of the market. And the gentleman that wrote stochastics was George Linn. And I was a friend of George's. I used to have him on a TV show I had called Stocks, Options, and Futures. That was it was one of the biggest shows on what's now CNBC. It was I think, Financial News Network. And we, every Wednesday, had a half-hour show with a live audience, and people would call in after the show because I'd have all the major analysts on. I'm talking from the Joe Granvilles, the Preptors, John Bollinger. I can go on. And I'd ask them all questions and my ideas, and then I'd call them if I had an idea. Well, slow stochastics and Bollinger Bands just dominated my thinking. I don't know why. I was fish in water with them, still am. And I asked George, I said, I have an idea. I want to make some changes. I showed him what the changes were. He said, I think you're onto something. And I left it at that. We reviewed for quite a while what I had done. It wasn't just a 5-minute conversation. He went back, looked at it. He says, I think you're onto something. I gave you the basics. I like what you ran with. And obviously, George is gone now, but I'd still be calling him if he weren't. But right up to the very top there, as you can see. So I'm looking for some resistance up here. That's the point. Not an end of a trend necessarily, but I think the pros will take some money off the table. In PAVE, I had a client ask me, wrote me on YouTube, in fact, it was there. Ira, don't you think it's all priced in? No, not at all. If you're going to start spending billions of dollars, and that's not going to be in a 1-year period. It's going to go on. No, I think the market here was the area where we call it a pipe. You'll hear me say that often. It's when the Bollinger Bands narrow in and prices spin within it. I also call it the psychiatrist trade, because you got to have your name of your shrink, because you think it's going to break out and it doesn't. By the time it breaks out, you help to have a way to catch it. That's all I can tell you. I'm not going to go further than that. You had your breakout, you had your correction back to where it started, but nothing's changed but the fundamentals. Now it's coming. You do with it what you want. So I think that the contra-trend rally, and that's what this whole rally up was, because you had broken into a downtrend, stopped at the Bollinger Band, back to the line in the sand. Now the market has to redevelop. We'll see which way it develops. In the industrial sector, Spider, I like this market for all the reasons that I've talked about all these other programs. So we've had a break in the market, which is always healthy. It went back to the line in the sand as it's done before. It's held it, and it's been bullish ever since June of last year. Just keeps running to the upside. Yeah, a stall is healthy. That's the kind of breaks you need in sectors so that the market takes out some of the froth that was in it. Now, what is the trend right now? Well, it doesn't have one. It's got a higher high and lower low. It's got upside bias. It had lost the embedded reading last week, no ifs, ands, or buts, and all of a sudden you can only get it back the week after on a weekly chart. It's got it back. Until it's lost again, nothing. Now, I would think it's lost in a big way if you get back under 84.51. So I look on my chart, I make my notes to myself, and away I go. I used to write this all on a chart. These charts, you can write whatever you want. I don't do that anymore. I'm a pro. I've done it long enough where I look at a chart and I know my mental notes. Higher lows, higher high. This is what I do for a living. That defines me as a pro. And you can see where it's at. I didn't say I'm a good pro. I said I'm a pro. Higher highs, higher lows, resistance up here. We'll see what's going to happen there. But we have an outside week up. I always look at outside weeks. I think they're a tripping point in the market. As long as the market doesn't take this out next week or the week after, I'm comfortable. That's fine. Trend up. Got a swing line that's up. We'll see if the market can go up. But, if you take this out in the next 2 weeks, I contend the market's going to try to make a run to 36.83 and you're in a correction mode suddenly in the market. That's what I use it for. You're overbought. You're not embedded. QQQ, right up to the upper Bollinger Band. What do you do when you get there? I think the pros take money off the table. I think a pro is smart enough to get rid of the name of the chart, trade the pattern. And that's what I expect they're doing. Embedded reading. I think they had buying modes in here. I know I certainly did for my clients. I was talking to them about that. Take my subscription. You'll see if I did or didn't. It's the simplest way. In the EFA, by the way, because I had a buying mode doesn't mean I win a lot of times. I could have buying modes and get stopped out. You think I didn't have losers this week? I did. That's what trading's about. You get winners, you get losers. The name of the game is control the risk and try to let the winner run for you. In the EFA, you got an embedded reading. Higher lows, higher highs, away you go. GLD, lower highs, lower lows. Where'd you go down to? The lower Bollinger Band. If you were sitting next to me, I'd give you the elbow and I'd say, what? Aren't you supposed to be covering some shorts down there? And you'll be telling me, hey, it's only going to get worse. And I'm saying, okay, I did my job. Because that's what I think you have to do, cover some shorts. You didn't get a buy signal. You're very oversold in GDX. You don't have a buy signal, but you have a higher high, lower low, and an outside week up. I'll pick up from this if you take out this week's low, that means we're going to go back to the Bollinger Band, and I think there'd be fresh selling under that, but I think the pros would have stops then over this week's high if you made that low first, whatever time it's going to happen. It's got to be over there. In the silver, I realize you all wanted to buy the market on that huge rally, and I got plenty of people that wrote me, called me my subscribers, and I said no. And I don't know, from where I went to school, I feel I saved them $2.50. The only reason I said no is why? Do I ever tell you to buy over a Bollinger Band? Never. What do I tell you to do? Add a Bollinger Band or above it. Take money off the table. Flat momentum, trend up though. When have I been able to say that? I'm very happy. So I think the pros between here and a break towards the 18-day average want to buy this market now. Now, that's what I'm saying. I think they'd keep a stop under 22.94, looking for the market to at least get back to the upper Bollinger Band and maybe push on that and start pushing it out higher. So that's a change, complete change of strategy that I'm throwing out there. TLT, I have been bearish. We've been talking about it. We've got a market here that, as you can see, both numbers on the weekly are under 20, under 20, under 20. It's got the embedded reading, not the week before, just embedded with this week. But now you're down to the 100-week average in the 18. What do I tell you to do when you reach a major support area? Nothing wrong with taking money off the table. Right here, on rallies, putting it back out since you're embedded, you're out of the market when the red line closes over 20. But I am saying that is where I think the pros are going to take money off the table right now. FXE, flip-flop of the dollar. Up to the upper Bollinger Band, contra trend, breakdown, finding its support there. We'll see what it wants to do. It is a market that is still overbought. We'll see if it can get out of that condition this week. Jets, we have the higher high, lower low. Was that FXC? Yeah, that was the currency. It's out of sequence with some other things I do. In DBA, I've been telling my clientele that I think the grains have been good and on the daily chart looking for it, but I can see that it's time to come out of the market. 1667, probably the upper Bollinger Band, I think that's going to be 1686 to 1691, 1667 recent. Even though you're embedded, just like I mentioned in TLT, there's a point where you take money off the table, and that's where we're at with it. That was the end of that. I covered my spiders. I now record at 8:20 in the morning. Not 8:20. Here's how I do it. At 8:20, I'm preparing my computers. At 8:30, that girl's not coming by. But at 8:30 in the morning, I open up my charts. I start putting in the daily numbers for the window envelopes and other studies that you don't see here that I include in my subscriber videos. All this comes into play, and by 8:40, I'm recording. My goal is to get to you those videos out between the recording, they're 20 minutes long, rendering them, and into your hands sometime 9:15 to 9:30 in the morning. I cover 41 charts now, so I've added to all this, but you can see the sectors that I'm trying to cover. This week I added THCX, PAVE. I'm constantly adding different things in the market. And I'll highlight. Well, this year I'm going to have highlight sections where every now and then we look at the most popular action that's happening for the day and go through that maybe. Maybe even an intraday quick snippet of some of those. I'm game for it. I want to do it. But I just keep adding. And for $8.95, what do you have to lose by taking a look to see what it is? 6 videos a week, 24 a month, each 15 to 25 minutes long. You're getting a lot of research. How do you get it? Just go to our website under the word research or call my staff. They'll work with you. I'm Ira. I will see you all come Monday. You have a good cold weekend. We're freezing here in Chicago. Take care.